Welcome to the Mycitizenagency channel. Imagine, you have been thinking about starting your own business in Europe for a long time. Perhaps you already have an idea to open a cafe, a beauty salon, an online store, an IT studio, a logistics company, a repair service, an educational project, or a small family business. But the main question immediately arises: which European Union country is best to start in? Germany, the Czech Republic, Spain, Portugal, the Netherlands, Lithuania, France, Slovenia, there are many options. Each country has its own rules, taxes, business requirements, cost of living, level of competition, and opportunities for legalization. And here it's important to understand there is no universal answer. A country that's a perfect fit for one entrepreneur may be completely unsuitable for another. That's why in this video we'll break down how to choose an EU country to launch a small business, what to take a look at before relocating, and what mistakes new entrepreneurs most often make. The first mistake is to choose a country based solely on the fact that it's beautiful there, I have friends there, or it's easier to move there. That's not enough for a business. You shouldn't start with a map of Europe, but with your business idea. Ask yourself a few questions. What exactly do you want to open? Is it an offline business or an online project? Do you need an office, a warehouse, a license, special premises, or employees? Are your customers local residents, tourists, other entrepreneurs, or an international audience? For example, for a cafe, bakery, or beauty salon, location, rent, the population's purchasing power, and local permits are critical. For IT services or consulting, the tax system, access to banking services, the ease of company registration, and the opportunity to work with clients from abroad are more important. If you want to start a business in transportation, construction, healthcare, education, or financial services, you need to check in advance whether licenses, qualifications, proof of education, or additional permits are required. Choosing the right country starts with understanding your product, your customers, and your business model. The second key factor is the market. Even if your business is doing well in your current country, that doesn't mean it will automatically be successful in Europe. Each EU country has its own consumer habits. In some places, people actively book services online, while in others, they prefer face-to-face contact. In one country, small family-run cafes are in demand. In another, delivery services, repair services, the beauty industry, elderly care, children's education, local products, or B2B services. Before choosing a country, research three things. Is there demand? Who are your competitors? And how can you stand out? Check out your competitors' websites, prices, reviews, social media, and advertisements. See how many similar businesses are already operating in the city or region. Sometimes high competition is a good sign because the market is already established. But if you don't know how you'll stand out, entering such a market will be difficult. It's also important to consider language. If your business relies on communicating with local customers, it will be harder without knowing the local language. In the Czech Republic, Germany, France, Spain, or Italy, customers often expect communication in the local language. But for online businesses or international services, English may be sufficient, especially at the start. Taxes are one of the key factors when choosing a country for a small business. However, it's important to look beyond just the corporate income tax rate. The total tax bill may include social security contributions, VAT, local taxes, payroll taxes, accounting fees, and mandatory payments for the business owner. In some countries, business registration may be simple, but monthly expenses can be high. In other countries, taxes may seem attractive, but there are complex reporting requirements or strict requirements for verifying business activity. For example, the conditions for a self-employed person and for a company with employees can vary significantly. If you plan to work alone, one jurisdiction might suit you. If you want to hire staff, open an office, and scale up, you'll need to consider a different cost model. Before launching, be sure to do a financial calculation. How much will registration, an accountant, rent, salaries, taxes, banking services, insurance, and legal support cost? And most importantly, don't rely solely on attractive figures you find online. Every country's tax system has its own nuances. It's better to consult with a specialist who understands your specific type of business in advance. For an entrepreneur, it is important not only to start a business, but also to have the right to live and work in the chosen country. Different EU countries offer various options for entrepreneurs to obtain legal status through company registration, self-employment, startup programs, investment, a visa for freelancers, or a residence permit based on economic activity. However, simply having a business does not always guarantee that you will be granted residency status. Often, you must provide proof of the business's actual operations, a business plan, proof of funds, contracts with clients, a rented office, economic benefits for the country, or projected income. Some countries are more focused on innovative startups, while others prioritize traditional small businesses. In some places, investments and job creation are key. In others, the entrepreneur's stable income and the absence of a burden on the social welfare system are prioritized. Therefore, before choosing a country, ask yourself, will you be able not only to register a business, but also to legally reside there with your family, renew your status, and apply for long-term residency in the future? This is especially important if you plan to move not for a few months, but for years. Sometimes entrepreneurs choose a country with a large market, but do not take into account the cost of living and startup expenses. As a result, rent, security deposits, salaries, utility bills, and professional services end up being higher than expected. For example, launching a small business in a big city in Germany, the Netherlands, or France may require more capital than a similar project in Slovenia, Lithuania, Slovakia, or Portugal. However, in more expensive countries, customers' purchasing power may be higher. There is no right or wrong choice here. It's about what fits your budget. Calculate a minimum cash reserve for the first 6-12 months. This should cover living expenses, rent, business registration, accounting, advertising, equipment, a website, taxes, insurance, transportation, and unforeseen costs. Small businesses rarely turn a profit from the very first month. That's why a financial cushion isn't a luxury. It's a safety net. You should be especially cautious when renting commercial space. In some countries, agreements have a long-term duration, require a security deposit, mandate that the tenant cover renovation costs, and enforce strict requirements regarding fire safety, health codes, or accessibility. The next factor is how easy it is to do business in the country. Consider the time required to register a company, the ability to open a bank account, accounting requirements, the availability of online services, the responsiveness of government agencies, and the clarity of procedures. In some countries, much can be done online, while in others you'll need to be present in person or require a notary, translator, local address, or representative. In some places, entrepreneurs can quickly access banking and tax services, while in others, opening an account can take weeks or even months. The predictability of regulations is also important. For small businesses, situations where an entrepreneur does not understand which reports to file, which permits to obtain, and what penalties may apply for a mistake are particularly risky. A good sign is the presence of a well-developed infrastructure, accountants, lawyers, business incubators, entrepreneurial communities, advisory centers, and accessible information in a language you understand. The easier it is for you to navigate the system, the lower the risk of costly mistakes at the start. A very important point. You need to choose not only a country, but also a specific city or region. Running a business in the capital and running a business in a small town are often two very different realities. In the capital, there are more customers, higher incomes, a more active business environment, and it's easier to find partners and employees. But rent, competition, and advertising costs are higher there. In smaller towns, your expenses may be lower, and there may be fewer competitors, but the market is limited, and for some niches, there may simply not be enough customers. For example, a coffee shop, a children's center, a beauty salon, or a store selling local goods are heavily dependent on the neighborhood, foot traffic, residents' habits, and income levels. An online business, on the other hand, may thrive better in a city with good infrastructure, an airport, co-working spaces, and a professional community. So don't base your decision solely on the country's name. Compare specific cities, rent, population, transportation, the business environment, the presence of your target audience, and the quality of life for your family. If you're not relocating alone, a business decision becomes a family decision. It's important to consider schools, daycare, healthcare, safety, language, cost of living, opportunities for your spouse, your children's adapting, and the prospects for obtaining resident status. Sometimes a country is ideal for business, but unsuitable for a family due to climate, language, cost of living, or social norms. And sometimes the opposite is true. A country is comfortable to live in, but the market is too small or complex for your business model. Also, think about your long-term goals. Do you simply want to start a small business and live in Europe? Are you planning to expand into other EU countries? Do you want to obtain permanent residency or citizenship in a few years? Your choice of country depends on these goals right from the start. The European Union offers many opportunities, but each country keeps its own rules regarding immigration, taxation, and doing business. Let's briefly look at the most common mistakes. First, choosing a country based solely on the advice of your friends. They may have a different business, a different budget, a different status, and different experiences. Second, focusing solely on taxes and failing to consider the full cost of living and doing business. Third, registering a business before understanding the requirements for residency, document renewal, and proof of income. The fourth is to underestimate the language and local rules for communicating with customers. The fifth is to copy a business model without adapting it to the local market. The sixth is to not set aside time for bureaucracy, banking procedures, finding a location, and obtaining permits. Seventh, starting without a financial reserve. Even a strong idea can face delays, seasonal fluctuations, advertising costs, and unexpected expenses. To avoid these mistakes, it's important to prepare in advance. Analyze the market, calculate your budget, verify your immigration eligibility, and seek advice before making a final decision. Now let's put everything together into a clear step-by-step guide. Step 1. Describe your business idea, what you're selling, to whom, in what format, and what resources you'll need. Step 2. Select from 3 to 5 EU countries that are a good fit for you in terms of market, language, budget, and living conditions. Step 3. Compare taxes, startup costs, cost of living, and reporting requirements. Step 4. Check immigration options. What type of residence permit is suitable for an entrepreneur, what documents are required, whether you can relocate with your family, and how to renew your status. Step 5. Research specific cities, not just countries. Step 6. Create a financial model covering at least 1 year. Step 7. Seek professional advice on your chosen country before registering your business and signing contracts. This approach helps you not just start a company, but build a sustainable foundation for living and working in Europe. Choosing an EU country for a small business isn't a matter of luck. It's a matter of analysis, preparation, and taking the right steps in the right order. It's important to consider not only taxes or a country's popularity, but also the market, language, cost of living, immigration rules, bureaucracy, city, family, and your long-term goals. If you're planning to start a business in Europe and want to figure out which country is right for your specific situation, submit a request for a free consultation via the link in the description. We will review your situation, create a personalized immigration plan for you, and prepare a complete set of documents to successfully obtain citizenship in one of the EU countries. We work on a one-on-one basis, taking into account your goals, your lifestyle, and your specific circumstances. Thank you for watching this video. If you're interested in this topic, subscribe to our channel and feel free to ask questions in the comments. We'll regularly publish program reviews, answer frequently asked questions, and share important news about immigration law and life in the EU. Your journey to Europe begins with the first step. Mycitizenagency is here for you, every step of the way.